God, it's Friday. Good morning and welcome to Business Morning on Channels Television. I'm Ladi Williams.
Good morning and welcome to the show. I'm Ini John Mekwa. Well, we're starting with an issue of concern, which is a protest in South Africa since the arrest of former President Jacob Zuma. The President, Cyril Ramaphosa, had asked South Africans to refrain from posting and circulating inflammatory messages on social media and from spreading rumors or false reports. Well, Ladi, this has been in the news for days.
Oh, yes.
We've seen violence, we've seen looting, we've seen killing. I mean, I think over 70
people have been killed.
So
a lot of businesses have had to pack up at this time. And obviously, insurance companies are not going to have it good at this point in South Africa.
When I saw some of the videos,
yeah.
I was wondering why the loots. You see people confidently carrying heavy chairs,
yeah.
food, bread. I don't know. Are you going to eat bread?
It shows the level of poverty in the land, because, if social people are well taken care of socially, you wouldn't see such acts of looting, happening. So it just shows the level of poverty actually in South Africa.
There's also
right
another
now.
argument, or another side to that argument that, would you just say because you're hungry you start stealing, except you had the tendency, from one side. There are so many people hungry people who would just go and beg.
It goes deep. It's a ripple effect.
Yeah, having the guts to break into stores,
stealing
burn down stores.
Coffins. I saw some people with coffins, and I'm like, what are you going to do with a coffin?
Doesn't make sense at all. And then there's the other side, like the president noted, giving bad impression, people posting things on social media that are not true.
That's also fueling.
Getting pictures. I saw a picture that looks like a picture from Lagos, actually.
Exactly.
And they claim
that's why you need to be careful what you see, the information you take on social media. Some of these pictures are from other, things that happened in the past, and they bring it in and use it as, what's actually happening.
I just wonder why people would be
what's
so
the aim?
naughty.
Yeah, exactly.
You want to...
Because it's a very serious matter.
Yeah, because it brings up a lot of reaction that brings another reaction, and might just cause the death of people, livelihood, and all that.
Yeah.
But so far, over 70 people are reported to have been killed. Also, protesters have taken to looting, like we have said.
Yeah.
And we know that a lot of Nigerians live and do business in South Africa.
Yeah.
So we want to find out the state of things, especially as it concerns Nigerian businesses in South Africa. We have our correspondent in South Africa, Brian Pugani, joining us now to tell us more. Hello, Brian. Good morning.
Good morning, Brian.
Good morning, guys. How are you guys doing?
Great. And so how much of damage has been done? Because we know Nigerians are very interested in having shops, stores, supermarkets. How much of these looting that we see and destruction has affected Nigerian businesses?
Well, at the moment, we don't have the exact number, but these acts are different. These attacks are quite different from the ones we normally witness, which are the xenophobic attacks, which target foreign-owned shops. But this time, like you were rightly discussing, a lot of big businesses have been affected. We had to have some reports of Nigerian shops being attacked in Johannesburg. There's an area called Malvern. We saw some car dealerships being destroyed there. So there's been quite a number of Nigerian businesses which have been attacked. But luckily enough, this time they weren't really targeted as we've seen in the past. So the damage is not really as massive as we've seen in the past couple of years.
Okay, but what is the Nigerian embassy, saying? Is there any information, on the owners of shops and, some kind of compensation?
Well, the Nigerian embassy did release a statement in a couple of days back. They are also not sure of how much damage has happened to the Nigerian businesses, but they are saying those who've had businesses being damaged can come forward, and so that we have that tally to know how many of these businesses and people have been affected. And they're saying that Nigerians need to remain as law-abiding citizens and not react violently as well when provoked, because we know when someone provokes you, we tend to also retaliate. So the Nigerian embassy is saying, no, we must continue, our Nigerian citizens must continue to be law-abiding citizens, not react to any of provocations, and also to be safe at this current juncture. Most shops were advised to close down in some areas of Johannesburg, to say until things cool down, shops must just close down. So that's what we're hearing from the Nigerian embassy. No form of compensation has been put forward as yet.
Okay. Any word from insurance companies?
No, not at the moment. Obviously, right now they're overwhelmed, Ladi. It's going to be really tough for insurance companies at the moment. We've seen malls burning down and quite a number of big stores and big companies. So insurance companies have got their hands full at the moment. We'll see how they're going to deal with that.
That's unplanned. Well, what's the situation now? We hear more troops are being sent, to bring calm, and rest to Johannesburg and other parts. What's the situation now? And I know some people were arrested. How many, or is it having any headway?
Well, at the moment, 25,000 more troops were deployed to different parts of Gauteng and KwaZulu-Natal. In Johannesburg, the situation is calmer, but in Durban, it's still volatile. We've been seeing quite a few of these attacks still going on, buildings still burning, people trying to take chances. But now the community has now taken a stand and saying we are not going to allow these lootings. We've seen communities standing together, protecting their areas. Quite a number of arrests have been made. As of today in the morning, more than 2,000 people have been arrested. But only a handful have appeared in court, and they've been remanded in custody from dates ranging from the 20th of July till September. So we don't know how many of those will really face the music when it comes to the law.
Right.
Yeah, you can say that again, because with over 2,000 people arrested, I wonder where they'll be kept, what's going to happen to the correctional centers, what's going to happen to courts and all that, honestly. Yeah. But anyway, we'll watch and see what goes on, and we do hope that total calm returns to the country, especially because of economic activities and lives that are involved. Thank you so much, Brian, and enjoy the rest of your day.
Thank you, Brian.
Thank you.
So we'll take a break now. When we come back, Business Morning will delve into the issues of today. Do stay with us. Welcome back. Well, the Central Bank of Nigeria report shows that credit to the economy grew by 5% to 44.7 trillion naira in 5 months to May this year, driven by increased lending to the private sector. What implication does this have on the economy? Tajuddin Ibrahim is the head of research and strategy at Chapel Hill Denham, and he tells us about this. Hello, Tajuddin. Good morning.
Thank you for having me. Good morning.
Good to have you. Well, when we
say... Thank you for having me.
Yeah, you're welcome. So when we say credit to the economy has grown, what implication does that have? What does it mean in a layman's word?
Well, the one thing that we have to recognize is what it implies increased availability of credit to the private sector, either from the deposit money banks or from the microfinance banks or from other sources, that are recognized by the regulator as, lending, businesses. So what happened in the first 5 months of this year is that we have seen an increase in credit flows to the economy, and that was driven by increase in the flow of credit from the deposit money banks to individuals, to businesses. At the same time, we saw increases in the flow of credit from the microfinance banks to small businesses and also to individuals. So what this implies is that we have the first five months of this year, where the banking sector was largely speaking supporting economic growth, because when you see credit improves in any economy, what it naturally does is to lead to increased demand for goods and services by businesses and also by individuals. So in summary, the banking sector played a very supportive role in economic recovery in this regard, on the back of increased availability of credit to the economy. And we have to also bear in mind that the increase in credit was not just in size, it is also in the number of people or individuals that have access to credit, that also increased. So the volume and the value, were the two drivers in this case, and it signals supporting, a possible recovery of the economy in the second quarter of this year. The number for the month of June has not been published, but my view is that that trend continued into June, and it implies that the second quarter of this year was good for the economy, as will be indicated in the GDP number that will be published by the MBS at some point. So broadly speaking, the development positive.
Okay, so Tajuddin, I mean, like you said, one of the impact or implication, of this increased credits is supposed to be more money. So they were supposed to have seen increase in demand of goods and services. Would you really say that in these first 5 months of the year, there's been increase in demand for goods and services?
Yes, I would say that because it depends on what indicators people are looking at. If we on the research side, for instance, we see a lot of things, and we have some strong views on some of these indicators. If we take a look at the telecommunication sector, for instance, what we noticed is that in the first 5 months they experienced increase in demand for for airtime. They experienced also increase in demand for data, and they also experienced increase in the number of transactions that people were carrying out on their mobile money platform. The same thing applies to some food businesses. In the first 5 months, we believe that businesses like cement businesses experienced increase in volume. Businesses like flour milling businesses also witnessed an increase in their sales volumes. So when you see credit flows improve in an economy, you will see some of these key sectors of such an economy improving in terms of sales volumes and also in terms of value addition to the entire economy as a whole. What we are seeing currently in the cement industry, for instance, speaks to an increase in the availability of homes and houses. We may not be there yet, but we are seeing some uptick in terms of volumes.
In spite of the high interest rate, lending to the private sector, increased, don't you think this would increase the risk of default?
Okay, so the rate of default is a function of a number of economic indicators, and what we have seen so far, based on what the CBN has published, is that the non-performing loan ratio is moving downwards, which means that while we are seeing credit flows improve, we are seeing a deceleration in the NPL ratio. And so the combination of these two factors, is positive. And if it is sustained over the next couple of quarters, then, the economy should be a lot more robust from the credit flow perspective. But in terms of, higher interest rates, I think the NPL ratio has also demonstrated that, or let me say, has proved to us that higher interest rates has not really resulted in an increase in the rate of default. And bear in mind also what people use the loans that they take from banks for. It is what really matters in many cases. Some people have borrowed and such borrowings have been channeled to businesses, and those businesses are making money, and those businesses are profitable. When you borrow and channel the borrowing to such a business, what you would not be defaulting. Where there's a problem is when you borrow beyond your capacity and also beyond your ability to repay over time. That is when there is a problem. And for me, I think so far the banking sector is not seeing a material damage in that regard, because it is
all right,
game of
Tajudeen, I think, like you mentioned, the inflation figure just got out. We just got it, and perhaps part of the impact of this more money to the private sector. Inflation is down 17.75, and all other sub indices also declined. Would you say this is part of the benefit of, like you said, more businesses have opened and we have more supply?
So it is partly reflective of that. We have more supply, to be honest, but that inflation number should be read in the context of the high base effect that we had last year. Nevertheless, we should all bear in mind that we have more businesses that have reopened post the lockdown and the restrictions that were put in place last year. And also, we have begun to see increase in the production of goods, particularly those in the food space. So you would expect harvest to improve, and also you would expect the availability of more food products in the market over time to also improve as we see an increase in harvest. So that speaks to supply.
All right, Tajudeen,
and the CPN is...
Okay, just a minute, Tajudeen. We need to take a quick break. So you just do hold your thoughts. When we come back from the break, we'll continue this conversation. You tell us your thoughts about inflation and some other issues. So we'll take a short break now. We'll be back in just a moment. Just stay with us. It's Business Morning on Channels Television. You're welcome back. Well, we still have Tajudeen with us talking about the inflation figures that are just out. Inflation is down 17.75%, and all sub-indices have also declined. And we had Tajudeen reacting to that figure just before we took that break. Hello, Tajudeen. Could you finish up your thoughts on that?
Yes. So I said earlier that we have, the lower inflation number, largely because of the low base effect. And we also have to bear in mind that we have increase in the availability of goods and services, because most businesses have returned to normalcy in terms of the hours of operation and also in terms of the volume of output. So we are seeing increase in supply. So that is also the factor that is partly supporting the moderation that we have seen so far in inflation. And in terms of financing, the CBN is doing its best to support the farmers by ensuring that they provide credits to them that could lift their production, that could lift their output and support increased flows of food items to the economy. And when you have such an increase in supplies, what you will most likely see is a downward moderation in the rate of increases in prices. Prices at some point may moderate for some products, but they may not moderate for some products. So for those that we are not seeing moderation in prices, at least we will see a deceleration in the rate of the increases in their prices. Those are my views.
Well, thank you so much, Tajudeen, for joining us this morning. And incidentally, you now were the first guest to react to the inflation figures that have just been released by the MBS this morning. Thank you so much, and do enjoy the rest of your weekend. Tajudeen Ibrahim, the head of research and strategy at Chapel Hill Denham. Thank you so much. Well, coming back to the studio now, Moody's has estimated the infrastructure gap in Nigeria to be at 3 trillion naira, which is 6 times the size of its annual GDP. The consequences of this is obvious in the struggle to create employment opportunities, foster industrial development, among others, which is why the federal government has embraced the public-private partnership approach to bridge this gap. Well, to speak to this issue, we have a market and financial analyst who is also the Chief Executive Officer of Finance with Mokhtar, Mr. Mohammed Mokhtar, joining us to discuss this. Good morning, Mr. Mohammed.
My pleasure being here this morning.
Good to have you. Well,
Thank you.
When you hear this figure, $3 trillion to bridge the gap, are you scared?
Naturally, you should be scared, but when it comes to infrastructure, it's not a one-off program, so it's a continuous program. So you see those 3 trillions, they say to bridge the gap. They won't tell you, but when you go detail the report, it means bridging the gap in the next 3 years, or maybe in the next 4 years, or in the next 5 years. So we're not just looking at 0.3 trillion to us immediately, and that will solve our problem. Because when it comes to infrastructure, you should know that infrastructure is not a program that you will just solve in a year. Some of the infrastructure can take 1 to 2 or 3 years, and technology evolve as these infrastructures.
So what you did, that was a wow project the year before. In the next couple of years would not be a wow project.
Would not be a wow project.
Yeah, I guess that's why the federal government embraced the PPP. So we have Infraco, which is supposed to start implementation in this quarter, the third quarter of 2021. What do you think should be the first few steps of Infraco as they begin implementation in this third quarter?
It's better late than never. That's what I would say. And I think it's something the government have considered the idea for a very long time. Finally, they have the political will or the economical will to come up with it. What do I expect them to do? I don't expect so much in the first quarter, because most of those companies that have been given these duties still have to gather their data, still have to look. You should know that when it comes to infrastructure, Nigeria doesn't have the manpower to do some of this infrastructure work. We need to depend on foreign partnership, even despite the public-private partnership. So I thought that they're working towards getting foreign partner, looking at where the infrastructure, and you know, it's going to be public-private partnership. Yes. It's not just going to be where government just want to put in money. So they want to look at the profitability of what the infrastructural project they want to look into. If you look at the infrastructural project, it's a different profit when you look at Lagos-Ibadan road infrastructural program. If you do public-private partnership with Ilori Mina Road, so you need to look at that also. So they also will be looking at things like that to say, okay, which one will be more profitable and which one will be more economically valuable in the long run for the economy. So those are part of what they will be doing now.
So prioritizing
you have to prioritize
based on profitability.
Yes, it's all about public-private partnership. It's all about profitability.
Yeah, but what do you think are the downsides to this partnership?
Well, the downside has to come with what I call variation in terms of figure. But like I said, technology evolves, and no matter how much you try to put into an infrastructure, after some time, evolving technology tends to change everything. So there will be a downside. It could also be a downside in the area of finance. Also, we need to look at that, especially when you look at we are grappling with a lot of FX challenges as a nation. And most of these projects are not going to be reside here. We're not going to be paying them in Naira. We're getting them in dollars. So that would
and the
be
government
one of the
is still struggling to also get revenue at this time.
At this time. So it's going to be a huge challenge, especially in the area of FX.
Yeah, so the federal government has approved the selection of 4 asset managers, you know, for this infrastructure fund. So part of what is expected of them is to raise funds. The federal government has brought in a 1 trillion naira seed capital, and then they're supposed to raise funds. What are they supposed to do? How are they supposed to raise this fund?
Well, that's what I say. They have to go into there, but they have to look at the kind of infrastructure they want to embark upon. They want to look at the road. Is it road you want to do? Is it power you want to do? Is it has to do with ICT type of infrastructure? So they really need to, is it the rail, transportation infrastructure? Are you going to look at the port on how to improve business in the port? Are you going to look at the road network? Are you going to say, look, we can do a better job if we handle this road? A lot they need. And unfortunately for them, most of all this, what we call juicy infrastructural projects are being embarked upon between the government and the Chinese already. So it's going to be a huge challenge for them to really pick up on a project that will be profitable and economical in the long run.
Still be funded.
But what are the avenues available to the private sector?
A lot, huge. We can see what Dangote is doing.
The one with the credit scheme, infrastructure credit scheme.
Is doing. You just need to go in Lagos here. You just need to look from you go towards the Apapa or Roshoku axis. You see the kind of road that Dangote has been able to come up with in that place. So you need to look at that also, and you begin to say, look, these roads are not just going to be the normal road. They are going to be roads that will lasting. But again, we need to reject it and realize that some of this government need to also look at their side and realize that maintenance is always the challenges when it comes to road infrastructure.
Right.
So are you just doing those things just for them to build, operate, and maintain? And how long will they build and operate and maintain? So I don't know what those agreements are like in terms of tax bracket. So, but when you want to do build, operate, and maintain, that means your tax credit will be large because you're talking of maintenance of the road. Because definitely putting road is not a challenge. It's maintaining those roads for the long run. Like Dangote told us that his road is going to last about 40 to 50 years. You won't have it. But we know that you have to do a lot of maintenance with the type of movement, unless we get it right in the railway sector like we're doing now, so that most of these heavy-duty products, cars, duties, goods, are not being moved towards those roads.
Get off the roads.
So then you can say it could last well. But my main challenge with it is good, but you tend to see that only one company that since government seems ready to do business, it just happen to be Dangote. Is it that other companies are not coming up? That is what this infrastructure is.
Another thing now has it been made attractive enough for private sector?
You see, when it comes to all the roads that Dangote is embarking upon, you could realize that roads that make sense to his own business. You look at from the port, coming down, bringing all his own goods and services. Those are what he's not thinking of the Lekki because of the refinery that's going to be located there. So he's looking at where are economical variable to his business. So that's what I say. The long and short of this will definitely, at the end of the day, end up in terms of how economical variable it is. Because, again, when you talk of power projects, if you decide to embark on a power project, that is largely capital intensive. That's not something you can finish in the next 1 to 2 years. How many of them are ready to tie their capitals to that long term? And they still have the fear, because Infraco is, of course, coming like a vehicle from the Central Bank of Nigeria. It has not had a serious legislature in terms of the National Assembly, which means it's open to policy somersaults. So that is another challenge.
And you know, like you mentioned, the federal government does some projects with the Chinese company, then you have the tax credit scheme, and now you have Infraco. Aren't they going to clash at some point? Because, okay, like the one you talked about Dangote, at the last FEC meeting, Dangote was just given a set of road to work on under the tax scheme. And this is close to what Infraco is supposed to be doing.
Yes, Infraco will not definitely come up on stream immediately. And remember, as like I said, they've been trying to go to this project for a very long time. Dangote is taking advantage of that and beginning to look at the roads that has to do with his business. Now, Infraco itself is going to be like an infrastructural bank or whatever you call it. It's going to be a huge company. It's going to be private sector driven. So they also will come up. Remember, like I said, new technology are evolving. That is what I feel Infraco should be looking. Because for me to come and do business with you, you must have a superior technology to what I'm doing business with. So for the private, for this Infraco to attract the kind of investment, we need to see them say, okay, we are backing upon the rail line from Lagos to Calabar. We are going to give you good rail, 21st century type of train. We're going to come up with this, with that. So why we partner? It's the partnership that really matters. Because we're seeing that challenge in the power sector. It's not because the power sector cannot work, but the technical partner does not have the indigenous partner and the technical partner have not been able to come together. And then when it comes to funding, now, you're telling federal sectors to go and get this money. They are going to get money from investors. No investor is going to give you your money just to wait for you to. You have to come up with a plan. How long will I have to wait for me to begin to recoup my investment? How much? So all those are what's going to play out in this project at the long run. But for now, I think Infraco will come up, but it will come up gradually. The credit tax scheme will still be more attractive to more industry. Because now you're seeing Dangote. I can assure you very soon, WAMCO will want to take up the one in their own axis.
I do hope so, because it seems it's just Dangote that's, I mean,
all
can't we have more participation from the private sector, even if they are not as big as the likes of Dangote? 2 or 3 companies can come together take up a project, and then
that's what it's supposed to be. But you can see that if you look at if you go to I'm not meant to mention names. If you go to Ajose Adoegu, you look at the runabouts. Some of them are being maintained by some of the Nigerian banks. You go to Under Falomo, you see that place is being maintained by a Nigerian bank. So if you look at that as a whole, some of them are taking little projects along their own axis of business, maybe through their headquarters or through one of their major branches or where they do business. We've seen also estates come up in Lagos to take upon a project that has to do with their own estate road, taxing themselves that, look, we need to do. Those are all both private partnership. But you don't see that said in the news because it's not as huge an impact economically like what you see in this Infraco. And the beauty about Infraco is going to create a lot of jobs, because this is the way to go when it comes to economic building, on trying to diversify your economy or trying to create employment. We are going to see an attack from the bottom up approach. That's what drags people out of poverty instead of the up to down approach. The bottom up approach is that we're going to get a lot of Nigerians being employed on most of all these projects. So it's going to create a snowball effect in virtually every sector of our economy, which is good for us.
But when you say we're going to get a whole lot of Nigerians being employed, do we have the skill set? Because, I mean, is it just the menial little jobs? When we talk of the experts, then we now have to import the human resource.
So we're still sending money out.
It's not too much of a problem when you bring in the foreigners or the expatriates to take over. It's more of a problem if after 3, 4, 5, 10 years, you can still train Nigerians to
which is what has been happening anyways.
So that has to do, that's what I said, that has to do with a contractual agreement. The build and maintain. If you are telling me, look, we are going to use you as a technical partner, we want you to come up here. For the next 10 years, you are going to be with us. And at the point of that, you are going to be training others of our Nigerians to take over this job in the next 10 to 15 years. If you put that in the agreement, it works. But when you look at most of the projects that we are doing here now, presently now, it's more or less like the 25 years plan, and they seems to be like going to be there forever. And after it's getting to that 25 years, they come up with something else to want to extend it. There are a lot of projects I want to mention that are having those issues now. So what they need to do is to put it there and make sure that most Nigerians are being trained. You saw that happen when we said that, okay, the Niger Delta region, when they came with the amnesty program, the oil companies were sending some Nigerians to go and learn welding and other things and then come back, and some of them were being employed. Those are the type of scheme that we need to adopt when it comes to Infraco. They must also, that's what I'm saying, we must look at new technology, and we need to build our manpower. And so Infraco should not just come in as just a vehicle just to drive infrastructure. They should also have a vehicle to train those people to take over those things. So that's why I said I expect that it will be involved, especially when it's driven by private sector.
But do you see Infraco taking advantage of the equities market at some point?
Well, the equity market, it depends on what project they are bringing. They could come in to get borrowing through the bond sector. They will come in to get borrowing through other means that they want to do. But as Infraco, as a company being listed, I don't see that happening anytime soon. But the good thing is that most of those behind Infracos are those that play the equity market. So which makes it that they will see the value in terms of the equity market, trying to bring Infraco there. Because if there's any area Nigeria has any challenges, it has to do with infrastructural gap. It's huge. Yes. And by the day, it's getting huger by the day. Yeah. If a country like the United States of America is putting on so much into their infrastructural development, that is one of the cardinal problems that the current Joe Biden is pushing the legislators to approve for them. That tells you that in terms of infrastructure, technology evolves over time, and you keep on improving upon it. If Infraco doesn't start immediately, if they don't start handling any project now, by next year, in terms of the way we are going technologically, you could be thinking of another means of doing that same route. We never knew that you could do roads with cement and other things that are going to last. Dangote have started it. Somebody can come up with a better innovation that's going to help.
So what about the consumer? Should they be thinking, okay, now when the private sector takes over, we're going to be paying tolls, or
that's
another,
of course, of course.
But there should be other means of them making money, not just the tolling.
No, you see, when it comes to that, you know, in developed nations of the world, you have an option. If you want to go through tolling, you go through tolling. That will be easier for you, to be faster for you to go through that. Then, if you want to do it professionally, but the challenge we have in Nigeria, you just need to look at the Lekki toll gate issues and realize that sometimes we think about the profit, just the profit. Because the challenge is that in things like that, you have to develop the link routes. The link routes needs to be developed. So that if I don't want to pay toll, I could go through the link route. It could be longer for me, but that's what I want to do.
Right.
So we must also look at that also, because even when you're talking of profit, there's where it is social corporate responsibility that you need to embark about because the whole idea is all about the people. It's all about development. It's all about the economy. So it shouldn't all be about profit. But in Nigeria, the cover is always there. Profit first, then maybe later on we'll begin to
yes, because I wonder how we will be able to, manage it so that even though we are getting a good thing, but it's not profit first, without too much interference from the government. Because like you mentioned the power sector earlier, one of the issues with the privatization with the power sector, they say is government interference. Government is still dictating the price and all that. So we don't know how we can balance this.
With this one, you see, the CBN is the one putting the first sort of money. They are investing into it. So 1 trillion. Private sector is investing towards it. So, but like I said, let them begin to think about the long-term profit that will come in instead of the short-term profit. Yes. So then again, that all depends on where you are getting the fund from. Are you getting it from the long-term area, or are you getting it from a short term? So depends on where you're getting your fund from, because you need to pay for your fund.
Yes,
Exactly.
nothing is free. Anyway, thank you so much for joining us, Mr. Mukhtar Mohammed, and sharing your thoughts on us
Thank you.
us on bridging the infrastructure gap in Nigeria, especially as Infraco begins implementation this
Infraco,
quarter.
can't wait for it to start.
Yeah. Mr. Mukhtar
you.
Mohammed is the CEO of Finance with Mukhtar, and he shared his thoughts with us. We'll just slip over to the market segment now. Will is standing by to give us a brief detail of what happened in the market yesterday. Will.
Good morning, Ini. Yes, the local bus swinging between gains and losses slipped by 0.01% yesterday at the close of yesterday's trading session. However, it had a mixed market performance, and this can be attributed to the late sell-offs in stocks of Nigerian breweries and GT Holdings, causing the oil share index to trade flat at 37,866.90 points. Market cap still below the 38,000 level, lost about 3 billion naira of the value of listed equities. But to make sense of this, to know what's happening there, we have Tajuddin Olayinka, a stockbroker at Valmont Securities. Good morning, Tajuddin.
Good morning, Will.
Tajuddin, we've seen the swings, the ups and downs in the market. There's a pullback of interest on the parts of investors in stocks. What's happening? Is this transitory? Can you give it what's, is going on there in that space?
Well, I think, I said it sometime in the past that, when markets is in need of information and that information is not coming, then, speculators will take advantage of whatever is available. So clearly, what we have seen is more of the speculative activities, coming from both sides of the both buy and sell side. Buy side usually from day traders, and the sell side usually from those who engage in short selling. So the activities have actually put the market on the roller coaster, whereby market goes up, it comes down. So it operates within that cycle, and until there are new information about the economy, about the market as a whole, both fixed income and equity market, before you now begin to see slight adjustment. And of course, results from companies do help push prices up. But right now we don't seem to have much of that, and that's why for now what we see is more movement along this space.
Thank you so much, Tajuddin, for giving us that perspective. So that's it, Ini. That's what's happening in the market right now. We're hoping for a positive outcome next week, hopefully.
Yeah, we do hope, especially now that inflation has tapered. Let's see how it will affect the market. Yes. See if it attracts more people to the markets, and we'll get the reports by next week. Thank you so much, Will. Yeah. So we'll take a short break. Now, when we come back, we'll head over to London, where Juliana is telling us how they're preparing for Freedom Day, which is on Monday. Stay with us. You're welcome back. It's still Business Morning on Channels Television. It's just a couple of days before Freedom Day in the UK. And, well, the British have been counting down to when they will have to move, or they can move around without masks, but a lot of stories are surrounding that. We have Juliana now to give us the details. Hello, Juliana. Good morning.
Good morning, Ini.
So what preparations are you guys putting in place towards Monday, the long-awaited Freedom Day?
Yeah, long awaited, but lots of anxiety, I've got to say. It definitely appears, Ini, as if England is in, goodness, is it the third or fourth wave of COVID-19? We're seeing really, really sharp numbers of positive COVID infections. Yesterday, for example, over 48,000 people tested positive for COVID-19. Last week, over 500,000 people were told to self-isolate because they had been in close contact with somebody that's been infected with COVID-19. So Britain has been described as an outlier meaning no other country in the world appears to be doing what we're doing, deciding to completely remove all COVID restrictions at a time when COVID numbers are just so high here. I think the only kind of shining light is the fact that we do have a positive a vaccination program going on at the moment. Over 80% of people, adults, have had one COVID jab. Over 65% of people have had 2 COVID jabs. But the numbers are alarming. So yes, on Monday, it is Freedom Day, but freedom at what cost? We're just going to, unfortunately, have to wait and see.
Well, I guess that's why bankers at Goldman Sachs will be required to wear their masks in spite of the easing of restriction.
Yeah, that's right. Goldman Sachs isn't the only one. You know, from Monday, it isn't going to be a legal requirement to wear masks, but it is fast going to become an essential item. We already heard earlier in the week from Sadiq Khan, the Mayor of London. He says that you won't be able to travel on any TfL service if you're not wearing a mask. So all of the major 4 supermarkets, as well as smaller supermarkets, said they will be asking shoppers to wear masks. But this is the big issue that a lot of people are having with Prime Minister Boris Johnson. Why are you saying it's no longer a legal requirement, whereas now employers and stores are telling people to wear it? It is very, very confusing, but hopefully more will come clear over the next couple of days.
But in spite of all this, sales at Burberry have returned to pre-pandemic levels. Where are people dressing up to, Juliana?
Well, they're going out, aren't they? And they want to go out with some spanky Burberry wear. Burberry doing really, really well. The past 3 months to June, they saw exceptional sales. Not unfortunately for them in their home base. Of course, they are a British brand. But in Europe, their sales are still down 8% lower than they were at pre-pandemic levels. Fortunately for them, they've got a very, very strong market in Asia. Asia-Pacific sales are up 7%. And in the Americas, and the Pacific, sales are up 37%. So they're pushing forward with their plans to create some new concept stores. I believe they're going to have a flagship one on Sloane Street in Chelsea and the King's Road. And they have 3 more coming up. So yes, for Burberry, things remain high.
Well, good for them, even though we don't have a lot of good news. But thank you so much, Juliana, and we'll talk to you again in the afternoon at 1:30 during Business Incorporated.
Thanks, Annie.
We'll move over now to the crypto space. Normally, it's a red Friday. I don't expect it to be different today, Laddie.
What's your bet, Tini?
It's red.
Okay. Yeah, you're right. Bitcoin, $31,688 this morning. Ethereum is also in the red, but surprisingly, we have stable coins and BNB. Yeah, Binance crypto exchange token is also in the green this morning. We have a market cap, $1.30 trillion traded. It's down 2.27%. 24-hour volume traded in the total crypto market still at $67.21 billion as at this morning, up about 7.11%. Bitcoin dominance is at 45.70%. Price of Bitcoin, 31,006, down 2%. 24-hour volume traded in Bitcoin this morning is up at $23.43 billion compared to yesterday at this time. It was around 18-something billion dollars. Let's bring in Michael Inaji now. Hello, Michael.
Good morning, Laddie. How are you?
Good morning, Michael. Great to have you. Happy Friday. Well, the Fed has weighed in on stable coins, you know, in the crypto market. What are the concerns here?
Yeah, so the Fed Chairman Powell namely stated a couple of concerns. His explicit words were, in a situation where we have like a 2008, 2000 Lehman kind of collapse, a lot of these stable coins you'll find are a lot like bank deposits or money market funds. Basically what they do is they take the deposits of the clients and then they put them in some kind of like a CD, like a security, like a deposit. And the deposit basically returns interest. But the only thing what the Chairman Powell is trying to say basically is the U.S. government, they're not trying to be the fastest in creating their own CBDC. So what they're planning on doing, from what his wording was, is rather than be the first one out the gate, they rather regulate stablecoins because right now, frankly, stablecoins resemble the 1800s when chartered banks used to make their own currency and it was a bit of a Wild West, and a lot of the similarities are going on right now. So basically, the language was basically saying that if they wanted in a single stroke, they could literally kill all stablecoins. But the chairman wasn't trying to say that that's what he wants to do. What he was trying to say, though, was regulation will be coming. You're going to see most of these stablecoin issuers like Circle, the one that's about to go public. You're going to see them basically, I think what's going to happen is they're going to have to become like banks, basically like chartered banks, how you have like in any country. They won't just be like a fintech company. They will have to be a chartered bank in order to issue stablecoins. That way the Fed has a better way of regulating them.
All right, but it seems that the Tether FUD is still, trying to find its way, into the market. Is it still pegged to $1?
And so the attestation, because of the New York Attorney General sued Tether, they had to actually attest to what was in their reserves, and it's only 3% of Tether is actually in physical cash. Another 6% is in cash, like you have treasuries and other like safer assets you would have. But what you find now is a lot of people are moving away from Tether just because of all that FUD. It is quite alarming to say, because a lot of people, some people who work on like the trading desk at JP Morgan have said, yes, Tether is the 7th largest the stablecoin, the 7th largest holder of commercial paper, but we don't actually know where their commercial paper is. It's a lot like It's a lot like Bernie Madoff. Bernie Madoff had one of the largest trading firms, but no one saw his trades. No one knew where his trades were. So the theory is a lot of that commercial paper maybe is Chinese commercial paper, but that's even worse if there was to be a bank run. In terms of getting the money back for that commercial paper.
Right. All right, Michael, quick one. Where do you see Bitcoin going next week?
I think we go lower. I think this weekend we could have one of those weekend fake rallies, but if not, I think you can see us look to test 30K, test 30K and look to break it to the downside.
All right, weekend fake rallies. They come with about 30-20% profit. Thank you so much, Michael.
Thank you so much, Laddie. I hope you have a good weekend now.
You too. You too. All righty, there you have it. Top water market cap, just BNB in the green, up 3%. Cardano is down. Dogecoin and XRP all down this Friday morning.
Okay. Well, let's hope for a better week next week. But I know that Bitcoin has to go down first and then it will come up.
Yeah, your price tag is still in the works there, so
because
we'll
I need
see
to
how
buy
that
the
happens.
dip. I need to buy the dip.
Yes, and let's hope you buy the dip when it actually comes.
I will. All right, well, that's it for the program for this week. Thank you so much for watching, but do join us at 1:30 for Business Incorporated, where we'll bring updated stories from the world of business. I'm Ini John Mekwa.
And I'm Laddie Williams. Have a great weekend.